Tesla stock has been on a roller coaster for years. Tesla stock has gone full-blown parabolic. Pegged by many as a high-risk, high-reward stock, Tesla Motors Incorporation ranks among the most interesting public companies in the world. Founder Elon Musk is a controversial superstar in the technology industry, and Tesla's Silicon Valley roots have boosted investor expectations. Today, we'll share with you 7 things you need to know about Tesla stock. Number 7. Record stock. With a market capitalization of around $265 billion, Tesla is the world's largest automaker in terms of value. Tesla shares have gained more than 400% this year, hitting 33 record closes in the process. The stock reached the latest hit when it closed at $2,238.75 and notched an intraday day record of $2,295.60. The stock is up 56% in August, which are shaping up to be its best month since May 2013 and its third best month on record. The stock rally has boosted the company's market valuation to around $409 billion and made it the 8th biggest company in the U.S. by market cap. Although disruptions on the production line at its Shanghai factory due to the pandemic seemed like they would derail Tesla's lofty goals this year, the company emerged surprisingly unscathed in the first quarter and reported strong numbers in the second quarter. The company beat expectations with deliveries of 90,891 cars in the second quarter. Deliveries in the first half of 2020 increased by about 13% over last year. Revenue of $6.4 billion outpaced expectations of $5.2 billion. It earned $104 million in net income, or 50 cents per share, compared with a loss of $408 million, $2.31 per share in the second quarter of last year. Perhaps most important to note, which Wall Street anticipated hotly, was that this represented Tesla's 4th consecutive quarter of profitability, a milestone that could have serious implications for the stock going forward. The latest string of records for Tesla came ahead of the stock split, as well as a battery day that Tesla has set for September 22nd. Wall Street views the event, a showcase of Tesla's battery technology, as another potential catalyst for the stock. Number 6. Volatility in Tesla stock. In percentage terms, the latest plunge isn't the worst Tesla stock has seen since going public in 2010. It isn't even in the top 3. On 3 separate occasions, it lost more than a third of its value. In total, Tesla stock has had 9 major plunges of 20% or more in the past 8 years, plus lots of smaller but still very unpleasant drops. This has always been a highly volatile stock. That's as you'd expect from a company built by a man some regard as an erratic genius. MarketWatch analyst shows that on the average day, Tesla rises and falls by more than 2%. That is more than 3 times the volatility of an S&P 500. Yet overall, since the IPO in 2010, the stock has risen from $17 to $275. Number 5. Tesla cash flow. Tesla faces a big cash call in about 6 months, analysts say. It's a significant problem, warns Rajvindra Gill at Needham & Company. If the stock is below 360 next March, he says, Tesla will have to pay out $920 million in cash to settle convertible bonds. Meanwhile, he says the company only has about $1.2 billion in spare, unrestricted cash on hand, so Tesla needs to turn over cash positive in the next few quarters to avoid a crunch. On the other hand, Wall Street analysts are predicting the company will be cash flow positive this year. Number 4. Competition is coming. Another red flag for Tesla is that the company will face its first true wave of EV competition in the next 2 years. In the first half of 2020, Tesla accounted for about 80% of U.S. EV sales, according to Loop Ventures. However, only 16 EV models are available in the U.S., 5 of which are Teslas. By the end of 2021, competitors are expected to introduce an additional 20 EV models to challenge Tesla's leading market share. Number 3. Price for perfection. Tesla short sellers are extremely skeptical of the stock's valuation. Even after a nearly 30% September sell-off from recent highs, Tesla shares trade at a forward earnings multiple of 121 and a price-to-sell ratio of about 13.8. That evaluation is a steep premium to legacy auto stocks Ford Motor Company, F, General Motors Company, GM, and Toyota Motor Company, TM, which average a forward earnings multiple of 10.3 and a price-to-sale ratio of 0.51. Faced with an onslaught of competition, Tesla's market cap is now nearly 4 times that of Ford, General Motors, and Fiat Chrysler, FCAU, combined, despite selling only about 400,000 cars per year. Compared to the Big Three sales of 17 million units, Tesla's revenue was down nearly 5% last quarter, but many Tesla bulls say the automaker is more like a high-growth tech stock than an auto company. Unfortunately, valuation comparisons to large-cap tech stocks Apple, AAPL, Amazon, AMZN, and Microsoft Corp, MSFT, still paint Tesla as overvalued. Tesla's forward earnings multiple is more than double the average of these tech giants, and its price-to-sale ratio is more than 50% higher. While there's no question that Tesla has shaken up the global auto industry, its spiking share price is already priced in a significant degree of long-term success. Tesla bears are skeptical that the company will ever be able to live up to, much less exceed, those sky-high expectations. Number 2. Pros of buying Tesla stock. The company is among the top 10 most popular holdings on commission-free trading app Robinhood, according to the platform's website. More than 530,000 users own the stock, placing TSLA just behind other big tech names Apple, AAPL, and Microsoft, MSFT. It's hard not to get excited about a company with visionary CEO Elon Musk at the helm. In addition to Tesla, Musk also owns SpaceX, which makes rockets and rocket engines, and his goal is to reduce the cost of spaceflight and send humans to Mars. He wowed the public and investors alike in early 2018 by strapping a red Tesla Roadster to the front of a SpaceX rocket and launching both into space, sending photos back to Earth of an astronaut seated behind the wheel of a sports car floating among the stars. The first quarter of 2020 was also the first full quarter with the company's new Shanghai factory up and running, and the gross margin from its Shanghai facility is already approaching the level of its US-made Model 3. As of July, the Model 3 has become the best-selling electric vehicle in China. Over-promising and under-delivering has long been the Tesla way. The Shanghai facility and the new Berlin location will both begin delivering Model Y vehicles in 2021, the same year that the company will begin rolling out the new Tesla Semi, an entry into the entirely new market for Tesla. The forthcoming Austin Gigafactory will be the company's largest, a 2,000-acre ecological paradise on the Colorado River with a boardwalk and trails open to the public. Tesla said it will hire 5,000 workers for the location and pay a minimum wage of $15 per hour, a welcome announcement as the economy still grapples with unemployment caused by the pandemic. Faster production of its cars, higher profitability, a foothold in China, possible inclusion in the S&P, a fancy new Gigafactory, and the largest electric vehicle market in the world are a winning combination for Tesla and its long-term investors. Number 1. Cons of buying Tesla stock. It has been called the most controversial stock on Wall Street. In spite of its recent successes, many analysts remain trepidatious about Tesla moving forward. The consensus on Wall Street is that the stock remains overvalued at its current price. Eric Gordon, professor at the Ross School of Business at the University of Michigan, summarizes some of the issues at Tesla. promised deadlines are missed. Manufacturing problems persist. It is a high-risk stock, and given the stock's price, it's not clear how high the reward can be. Analysts also say it's hard to get a good handle on exactly where Tesla stands, performance-wise. Even with generous government incentives, such as tax breaks for alternative technology, potential customers of Tesla's Model S are still faced with a large price tag that starts at $75,000. The cars are not only expensive for consumers to purchase, but they're also costly for Tesla to make. Vertical Group analyst Gordon Johnson estimated that the company loses roughly $14,000 on each of the Model 3 vehicles it sells. Though Musk often creates excitement around his company, he can just as often create controversy. He's been known to call analyst questions boneheaded during earnings calls, has problems with the U.S. Security and Exchange Commission, tweeted that he wanted to take Tesla private, and smoked marijuana on a popular podcast. Most recently, he has gained the spotlight once more for rallying against pandemic-inspired lockdowns. While Musk's personality naturally draws attention, sometimes it can overshadow the successes of his company. Musk single-handedly knocked billions off Tesla's market value by tweeting, "Tesla stock price is too high, IMO." That was assumed to be slang for "in my opinion." Whatever the case, the CEO shared his candid thoughts with more than 36 million followers and caused the stock price to tank. If history is any guide, betting against Elon Musk tends to be a bad call, but the risk remains. The investors who are interested in buying Tesla shares should be adding them to a well-diversified portfolio. Tesla is already the largest car company in the world in terms of market cap. If things continue to go Tesla's way, that's not likely to change anytime soon. Do share with us if you know anything else about Tesla stock. Please subscribe to The Luxury World. Thanks for watching.